Imagine buying a home, starting a business, or building a hotel and being told you can't get insurance at any price. Now, this isn't a hypothetical anymore because right now, in parts of the world, insurance isn't just getting more expensive, it's disappearing. And in some cases, it's not because of storms or fires, it's because of war. Hello, I'm Jerome Ryan, joined by Mike Janko, and this is Impact Analysis.
And today, Jerome, we're talking about something many leaders don't think about until it's too late. Insurance. It's one of the critical business processes that really holds the whole global economy together. But right now, that system's under a lot of pressure, multiple directions at the same time due to the geopolitical conflict we're all seeing, especially what's unfolding with Iran and the Strait of Hormuz. There's a key point we're seeing as insurers are pulling back right now, everything else is starting to stall.
So what happens when insurance doesn't just get more expensive, but starts to disappear entirely? Today, we're breaking down why that's happening and why what's happening around Iran and Hormuz could accelerate this into a global economic shock.
So across the globe, insurers are raising prices, tightening coverage, or exiting the markets altogether. This has been building for years due to the catastrophic weather losses we've experienced through tornadoes, hurricanes, flooding. Right now, there's a big accelerant, war risk. So in the Strait of Hormuz, we have a critical shipping choke point, and insurance markets are reacting in real time to the conflict. War risk premiums have surged in cost. Some insurers are even withdrawing coverage totally, and shipping companies are hesitating, even refusing to transit into the region. And Jerome, many people believe that the traffic through the Strait of Hormuz isn't being controlled by Iran, not the US government, it's the insurers that are controlling the flow of ships in our economy right now.
Yeah, and here's where it gets serious. Some ships just aren't paying more. They're not able to go, as you said, right? The Strait of Hormuz traffic has dropped dramatically. Insurers are pulling back. Obviously, a lot of that does have to do with war, but it is the secondary effects of what's happening at that point. So at the same time, Iran is signaling it may exert even more control over the strait. They floated the idea of charging a toll to come through, or punish those in a kinetic way, I can assume, for those that try to run the strait without permission. One thing I'd like to mention here before we get too deep in today's episode is an article that was published by The Guardian somewhat recently, only about maybe a week or two back, as of the time of this recording. And this is the Guardian reporting that Lloyd's of London has emphasized and come up with a statement, public statement, that they at least aren't stopping the insurance contracts for tankers and vessels transiting the Strait of Hormuz. They are, however, putting a little bit more restrictions on it around around coverages and notifications and additional premiums that would be charged to price in that risk. So we wanted to make sure that viewers understood that there was a lot of discussion earlier this month around Lloyd's potentially stopping the insurance. That's not the case, but they are putting some restrictions on it. So, where do we have the situation today? Well, risk is rising, right? I mean, I just mentioned that from the Lloyd's article in The Guardian, where they need to price in risk. Insurance is shrinking, meaning you get less coverage for the premiums that you're paying, or in some cases disappearing for some of those carriers that have just said, we're just not going to take on that risk, or we're going to categorize it as an act of war, and it becomes an exclusion. So all of this is really just squeezing global trade as we know it. And again, this is not a regional issue. We look at the Strait of Hormuz, we can point to it on a map somewhere out in the other part of the world, at least for those that may be living in the United States or Western Europe, but it's a systemic risk that can impact all of us no matter where we live.
As you said, Jerome, we're all being affected. It's not just about oil tankers in the Middle East. So when insurance disappears in a critical area like Hormuz, the impact spreads everywhere. Check out some of these numbers. So you referenced insurance shipping costs. They're typically 1 to 1.5% of the ship's value, up to $2 million for large ships. But if you're somehow now associated with the US, that can go to 5 to 10% of the ship's value, up to $10 million for a large ship. And some ships are even being charged 10% of their total value, over $10 million, if they want to take on the risk. The last time this occurred was back in 1980 to 1984 in the Iraq War. So there probably were some lessons learned that we could have had from the past 40 plus years.
Yeah, learning from history is always a good thing, but we always seem to fail to do that. But those numbers that you just shared, that hits businesses' bottom line, right? This is again, the story is about oil, gas, and the Strait of Hormuz and the conflict in Iran and the Middle East right now, but it's really a business issue. So manufacturers, logistics companies, hotels, retailers, every single one of us touches in some way or another goods or materials that are affected by the price of shipping and insurance that's coming through the Strait of Hormuz. So if your supply chain does touch global shipping, which again, I would argue virtually everyone does, you're now exposed to war risk or war risk pricing. And here's the bigger issue. Banks and quite frankly, the larger the stock markets, they don't like uncertainty. If insurance becomes unstable, financing gets harder, projects slow down, expansion plans pause. I can guarantee you that any projects or anything that's looking to be financed that has any exposure here, this is part of the due diligence process that a bank or a lender is going to be looking at, is understanding how the price of risk is going to impact your profitability. This is how a risk event turns into an economic slowdown.
That's great insight, Jerome. So let's start talking about the cascading effects and second and third order impacts as well.
Thanks, Mike. As we've mentioned, the first effect is market instability. But what comes next is more important because this isn't just about higher prices, it's about parts of the system becoming uninsurable or at the very least more expensive to insure.
We're already seeing governments stepping in. The US government is partnering with the insurer Chubb. They're providing $20 billion worth of coverage to stabilize the strait right now. There's other countries too that are providing a safety net with war risk insurance just to keep the trade moving. This is a big signal. When the governments have to support insurance markets, you're no longer in a normal operating environment.
Yeah, that's right, Mike. And companies are starting to react. They're asking basic questions. Should we reroute supply chains, relocate operations, or avoid certain regions entirely? When they start to make those types of decisions, those become long-term decisions that affect the next series of years in front of us. They don't usually snap back immediately after the risk goes away. So, because if you can't insure it, you should probably not be even operating in that area.
That's a great point, Jerome. And here's one other thought. Being highly protected risk as an organization is still your competitive advantage. You have higher policy limits, better terms, you have solid property protection, human element programs, et cetera, that leadership mindset. You're going to get 20 to 40% better price advantage over non-HPR. So you can go from cheaper insurance to at least being insurable. Even if you're HPR and you're in the strait, you get hit hard if you have single sole source suppliers, or if your product is energy intensive, like the material being shipped through there. If you're making chemicals, metals, plastics, you have direct exposure. So having a background in manufacturing, I've seen the benefits of well-constructed plants, skilled incident response team, and that whole leadership mindset. That's your operational resilience competitive advantage. So we're starting to hit a bigger question. What risks will be insurable 5 years from now? Because that answer is going to determine where business can even exist.
That's a good point, Mike. Maybe at this point we transition over to key takeaways.
Yeah, so here's the bottom line. Insurance isn't just a financial office function anymore. It's become a real-time indicator of global risk. And right now, it's flashing warning signals. From the California wildfires to Florida hurricanes to the Strait of Hormuz and the general losses in the markets, the message is the same risks that are rising and creating impact faster than the system can absorb are occurring now. So do what you can to minimize those risks, become HPR, become operationally resilient. The way you're doing business with insurers is changing right now.
So, what should leaders do? Well, first, start treating insurance as a strategic signal, not just a cost. I think Traditionally, insurance has been something that you tactically look at, you purchase and you move on. But now with rising premiums, we're in a hard market from the insurance market standpoint right now. So if premiums are rising or coverages are shrinking, that's telling you something about your exposure. Second, build resilience into your operations. Diversify supply chains. Make sure that you have alternatives and sometimes alternatives to the alternatives. Evaluate geographic risk. This should absolutely be part of your risk assessment and something that you look at every year. You should also put together long tail risk report plans. Start looking at these low likelihood but high impact events and build playbooks around how you would handle a situation. So that's really stress testing involving disruptions in places like Hormuz, because what's happening here isn't isolated, it's a preview.
And finally, don't assume the system, the way it's operating right now, is always going to be there. In some places right now, it's changing already. That's why understanding these signals early is critical so you can make better business decisions. Thanks for joining us on Impact Analysis, where we strongly believe you can manage risk now or its consequences later.